waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance base slow down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance base drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Heat in the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen, navigating depths where the giants are seen. Seacrest the name, the gold standard inside, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Good morning, everybody. Happy Thursday. Welcome to Seacrest Markets live stream. Join us and stay with us as we break down the markets in real time, going over indices, metals, cryptocurrencies, FX, and any other instrument that you do so wished for us to go over. Now, as always, for those that are new to our live streams, I will always break down the thematics of the market. I'll always discuss what's kind of going on in the macro landscape, be it the hawkish FOMC pivots to the ongoing US and Iran talks, which seem to be hyper-focused at the moment on Geneva. Now, what we're obviously seeing at the moment as well is the potential rumors that the US could strike Iran as soon as this week, which, whilst there are signs of progress, it doesn't seem that Iran is willing to yield on core demands such as keeping a geopolitical floor under oil. And we'll also take into consideration the recent data flow, so the Eurozone consumer confidence, the UK CBI industrial trend surveys, and we'll try and gauge whether realistically we are going to see a European recovery that's going to keep pace with the US. We'll then, of course, go down and break down the indices. We'll talk about how we're seeing fragility in the US markets at the moment. We'll talk about how the European indexes have already traded this morning and they're starting to trade fairly mixed. You know, the DAX slightly easing off again, continuing to ease off with those tariff fears. We have the FTSE 100 continuing to underperform due to that stronger pound. Again, why are we seeing a stronger pound? Because of UK inflation data. And then in terms of Asia, what's going on? The Nikkei, the Hang Seng, we saw huge outflows in the morning following the meeting with, let me get my pronunciation correct, the PM Takaishi, as well as the Bank of Japan's governor, Ueda, which at the moment they're suggesting a lack of fiscal monetary coordination. So what do we see? The Hang Seng and the Chinese markets remain fairly quiet as well. That could be lag from the Lunar New Year break, the year of the fire horse, but a lot of uncertainty is in the market, so there's going to be multiple different strings as to why markets are remaining fairly lackluster this week. I mean, yesterday was okay. We did see a couple of good moves, which we'll break down momentarily. And we are obviously still seeing significant dominance into, for example, the dollar. So the DXY, which we'll look at. There was hawkish Fed minutes yesterday during the FOMC minutes, which, quite frankly, remains the liquidity king as Treasury yields continue to climb. So we'll keep an eye on the DXY. We'll break that down today. And of course, we'll break it down multiple other instruments. So if I was to, just before I go into the charts, if I was to break down some geopolitical and fundamental risks that we're currently seeing. So in a headline, within a nutshell, without me breaking them down specifically, because I know I talk too much on certain areas and I want to kind of really concentrate it down. We have the Walsh factor, which is ongoing. So the Fed nominee, Kevin Walsh, because of course we have that reputation from Kevin Walsh that he is a hawk, that potentially is meaning that it's now fully priced in. So markets are looking for any dovish surprises in upcoming speeches, which could lead to quite a significant short squeeze in gold. So that's what we're looking at there. In the Middle East, that breakdown in Geneva talk, which I touched upon earlier, is likely to see oil trade higher with gold over the weekend. So coming into the weekend, we're expecting prices to trade higher. And then that Lunar New Year vacuum with China offline, we're expecting quite sporadic movements in silver and in copper. So Keep an eye on the higher time frames. Try to understand where this uncertainty is being seen. Are there going to be potential opportunities for us to exploit? You know, if we looked at, when we look at gold, let's see if there was a confirmation overnight, but there was a 4-hour hammer. What's that going to do? Is that just going to be noise in the chart, or is that going to be something signaling the price wants to trade higher in gold specifically? So, summary on instruments: gold neutral to bullish. We need to see gold trade above 5,052 really, and close above that level really to confirm a recovery. Bitcoin we're still bearish on, but we want to see it hold above 68,000. If that doesn't and we fail and we close above and below it, 60,000 will be the next target, which is a level that we hit previously. Euro dollar bearish on, just because we're seeing continued strength from the dollar. Plus we also have US durable goods which are out tomorrow. If they're strong, then we'll see euro continue to trade down into 117s. The S&P we're cautious on. That resistance is still present at 7,000, and we have support now remaining at 6,800. So, I mean, we had a nice run on the S&P yesterday from specific levels. We'll break that down momentarily. You can see it on my screen. I'll just zoom in just so you can see this area of price action a little bit better, because where I'm containing a lot within our stream, the screen and charts aren't the biggest. So let's talk indices. This is a huge coffee, man. Okay, so sorry, my brother-in-law texted me about an investment. All right, so S&P eked out a small gain yesterday. So we saw the S&P trade up 0.2%, regardless of that hawkish Fed tone. So markets did, of course, come in overnight and start to trade a little bit higher, following in that good news, that good momentum, that good flow. We started to round off ever so slightly, and again, really looks like we're ranging throughout these European and London sessions at the moment. So 4 hour sits pretty much in the middle of our range, that 6,800 to that 7,000 level. We traded up into 6,900 overnight, right in the equilibrium of that 7 and 6.8 mark. And no, it's not 6.7. We're not in pre-scroll. So another consideration is, in terms of this huge bearish engulfing Maruboso candle, price has come to mitigate 50% of that entire leg down. I'm still looking for higher prices. The longs yesterday continue to feel prices higher. We are starting to round out, but there could still be some form of demand slightly lower down within this leg, which will break down as we trade into the 60-minute, the 30-minute, and we'll maybe go down into the M15. And this is purely just to give us some ideas on what the market could want. We're trying to understand probable areas for us to get involved. Current 4 hour candle on the S&P is engulfing of that previous candle / 2 candles. So if you look at the last 2 4 hour candles, our current 4 hour candle, which ends in just under 2 hours, currently is pointing to lower prices during this session. So let's see how the 60-minute is actually showing up. So the 60-minute is ranging. So we're bullish in a range. So let me explain. Demand is holding, right? So we've got this demand here, which is holding. And this demand here, this sell to buy a pivot, caused the break of this high. So we've come back in, we've revisited and retested that demand. which also subsequently was yesterday's point of control, which was we traded into towards the end of the trading session, the trading day. And then throughout Asia, we've just been fairly corrective. But what we're seeing is supply is now potentially taking control. And I can't say that because why is supply held if demand is in control? Now, what I mean by that is this demand is intact. We haven't failed. On the lower time frame, I'm sure we could see something that's actually broken to the downside, and we can actually understand why markets are trading correctively or potentially hinting that we're going lower. Markets are fractal. We start to flag those on the lower time frames, and we build out what we would call bottoms up from a technical perspective. It's not the true definition bottoms up, but we can quantify it. However, we've also, because demand's being held and supply is being held, this is why we're saying we're trading in a range, because we've got no true direction on price. We're ranging. We're now waiting. We're not bearish unconfirmed because we haven't broken anything on the 60-minute time frame to the downside to quantify a bearish connotation. Supply is still holding on the 60-minute time frame as well, so we're ranging. Now, if we go down into the M30, we may see something. Now, I can see immediately we've not really got anything, but we do have a change of character. But again, it's crap. So we're still bullish at this moment in time. We're not bearish unconfirmed. We're bullish. The only thing that most people from a technical perspective might say is that we've got an inverted W, which is an M pattern. But that's bullish, okay? So we have this, we have a pullback. We pull back into demand, and then the expectation on price from here would be to trade back higher. So we've kind of done that, right? You can all agree, ladies and gentlemen, or traders and gentlemen, because that's what I prefer to say. We can all agree, traders and gentlemen, that we pretty much fulfilled that kind of pattern. Now, we failed to trade higher. We've respected supply. Again, why have we respected supply if demand's in control? So the reason we ask ourselves that is it due to the fact that supply is now going to take control? Are we going to range out in the markets? Because if supply is holding and demand's holding, we're in a range. Simple as. Now that this supply is held, we have two prominent ways to look at this market. There's going to be 8 different ways or 6 different ways that we trade it, but there's 2 scenarios. Of course, we could stay in cash, but there's 2 scenarios. We're either going to continue to trade inside this range, or we're going to break out. They're the 2 prominent scenarios. Now, we need to identify from there, how are we going to break out? Are we going to break out to the upside? Or are we going to break out to the downside? At the moment, we are printing a higher low from our previous higher low, and we're respecting this subjective ascending trend line. And that's all it is. It's a subjective level that we're trying to quantify what's actually going on with price at the moment. Now, if I'm looking at this massive bearish candle on the 30-minute, the 1 hour, and the 4 hour, to me, if this 4 hour candle is respected and we've got 50%, right, we could see price drift back up, and then we could get a sell-off. The candle has broken that. The current candle on the 4 hour on the 30-minute has broken that current previous 30-minute bearish engulfing candle. So there would be lots of sellers trying to step into this market. One thing to factor in: we have respected that ascending trend line, which is potentially shown as support. So if supply is holding, if demand's holding, the theory would be the price is going to come back up. And because we're trading in a range, it's going to come back down. And then what we're looking to do is either trade from the extremes if we're feeling a little bit aggressive. So we can trade from these extremes because both the low and the high are being supported, and we are seeing obviously higher lows and we are seeing lower highs. But what we really want to see is a break. We want to see the market break, retest, continuation. Vice versa, we want to see it break, retest, continuation. It doesn't necessarily mean we get long from that move. That gives us realistically the confirmation that the momentum is to that opposing side, be it bullish or bearish. Once we get that confirmation, or we get the confirmation that the market is trading in the bull or bear momentum that we're seeing, we then need to see a further break to the upside. We then want to see confluences come in that suggest that our edge is going to play. So whether that be a break, retest, and then we get the confluences to trade in the bull direction or the bear direction, that's what we want to see. I mean, looking at the S&P right now on the M30, it looks like it's going to try and break lower. If we go down into the M15, we're starting to see that attempt. Now, this candle is open. It doesn't mean we want to get short right now. What we want to wait for, again, we want to wait for the close. We then want to wait for a retest. Some traders will just get involved on the break. So you've got your breakout traders, you've got your breakout retest traders, then you've got your breakout retest continuation, and then you've got your breakout retest continuation confluence, etc. So it depends on how many confluences you need to be stacked in your favor to increase the probabilistic edge, or to be in line with your edge, your methodology. So if we look at the M15, again, we had that sweep of the higher, we had this break. So, sorry, let me just put my mammoth of a coffee down. We had this change of character. So we had a sweep, we've broken down. So on the M15, we're bearish, unconfirmed. Unconfirmed means because we haven't actually confirmed that supply is in control. What we need for that is a retest into at least the range. We then need further breakdowns to the right-hand side. Now, it doesn't necessarily need to come into the extreme. What we could see is this. We could see break, retest, comes into the leg. We then get a subsequent break to the downside. And from here, from after this retest, we can get short. So it doesn't necessarily need to be at vanilla, utopian, esoteric level. Now, the reason I say all of those three is because not everyone is aware of one of those words, maybe, right? So I try to break down everything as much as I possibly can in very layman's terms. I try to appeal. I try to kind of make sure that I fit in with how many of the retail traders will play the game. So again, 15-minute looks like it's trying to break. We're currently breaking that low. Looks like we're going to trade inside at this moment in time. I mean, we've got 11 minutes, so let's wait and see what happens in 11 minutes. But we'll go down into the M5 just to see what's going on. So M5 is very range bound at the moment at the extreme of the volume range. So if you zoom in, and I can probably only just see this, and I know that that means you'll barely be able to see this. Oh my goodness, you're not going to be able to see this, but can anyone see about here where the middle of the circle is running through the equilibrium perpendicular line about 68.73? Can anyone see that very faint white line? I'll double click on it and I'll bring it up. I'll even make it a little bit of a lighter color. See it now? Of course you can see it now. I'll change it to red, change it to orange, just so you can kind of see it. I'll change it to grey. So that level there is the extreme of the contained volume range, right? So you can see why we're being a little bit reactive to that area. And the same will be at the extreme up here, as you can see. So, yes, sir. Good morning, Sloth. Hope you're well. So rejections obviously coming off of that extreme level at 68.74s. Again, subjective ascended trend line, which is in that ascending triangle pattern. Market's really trying to hold and support this level at the moment. So M5 closed bearish, but inside the previous candle, so we're ranging at the moment. We had that shooting kind of doji star at the top here, that doji long-legged breakdown, which again, this suggests indecision. Markets aren't certain what they want. We've broken down, but we failed to take this low, so we're ranging in the moment, right? So, I mean, we're almost creating this, which would suggest, I mean, I've seen these patterns fail more often than not. Everyone talks about patterns, but you know, I've seen this pattern fail and just continue to the downside. But this does, in a textbook definition, tries to quantify a bullish reversal. I mean, look, I'm always bullish, the S&P, always bullish, but I'm not ignorant to the fact that thinking that it always goes up. I like when it goes down. I really do, because it means I can buy more at better prices. Because, okay, yeah, all right, you buy it at 7,000 and in 10 years' time, it might be 8,000. I'm just saying, might be. Might be lesser, might be longer. And you'll be like, oh, I'm so glad I bought at 7,000. And equally, if you buy at 7,000, it goes down to 6,000. You're like, oh, so glad I bought at 7,000. Not. But crazy out there. I think the definition of insanity is markets. I mean, you've got mental problems if you're trading all the time. So let's see how that pans out. I mean, look, I'd want to see a break. So from here, with that little range we've got, I'd want to see a break, retest, continuation, and then ideally another break, retest, continuation. I'd like to get involved here. I mean, I might risk it for a little biscuit if we had a singular break and a retest continuation, because the way these markets are trading, you know, we're coming into the weekend. We've got potential war on our hands from the US into Iran with the strikes. We have the government shutdown to be announced on Friday. We have President Trump came out yesterday and just slated Keir Starmer even more. I mean, I don't believe we could have, and I'm quite glad we're not in certain communist countries officially yet, but I'm quite glad that we're in a country that does have seemingly elasticity on our free speech. And it quite starkly exposes the Labour government, and specifically the PM in reference here, based on Donald Trump's outburst yesterday evening about further islands that we're looking to give away that expose Europe and UK quite significantly to potential attacks. I mean, could we have a more incompetent PM? Probably, but at this moment in time, it doesn't appear so. I am all for balance in an economy. I'm all for multicultural, diverse societies and mixed ethnicities coming into the UK to seek a better life, to improve our economy, to bring their skills, to bring their knowledge, to bring their tech, you know, to bring their labor, to bring their families, to bring their friends, and really kind of create an incredible society, a hybrid of economies is what I like to call it, whether that be London, New York, Dubai, all of these amazing cities around the world and amazing capitals around the world are born on multiculturalism. But what I'm not for is specific policies that benefit. If you look at countries around the world, their policies favor their citizens over non-citizens. But it's a very touchy subject, and I think realistically the UK, in its policies, not necessarily in certain areas, not inhumane, none of that, I don't agree with any of that, but in their policies they really need to get a grip on the UK. national insurances, corporate taxes, VAT, employers' national insurance as well, which is obviously covered in that. They are fucking financially illiterate, really are. They don't have an understanding of economics whatsoever, and monetary policies and fiscal policy expansions and general fiscal policies. They are, like, if you look at unemployment in the UK, and I tweeted about this yesterday actually, and I need to bring it up because, oh my goodness, why would you want to work in the UK if under this Labour socialist government you can get universal credits up to I think it's a little bit more than this, but it's about £4,000 per month. £4,000 per month. There's no tax on that. There's no liability, anything on that, right? You get £4,000 a month if you're on PIP, if you're unemployed, if you're long-term sick, if you can't work, if you've got children, if you've got this, you get £4,000 a month. You don't pay any taxes, you don't pay any national insurance, you're looked after by the UK government. That equates to about £75,000 as a worker. If you worked, in order to get about £4 and a bit grand a month, you need to be earning about 70,000 sterling a year, right? Gross, before tax. Deduct your tax, deduct your national insurances, etc., you get about 4 to 5 grand a month roughly, right? So getting that breakout on the S&P, just keep an eye on that. But do you realise how hard it is in the UK to earn 7,000 a month? Our unemployment has gone up, and that was the main reason I brought that up. But if you go into my X yesterday, 2.8 million people in the UK are out of work due to long-term sickness, and around 7 million have said that they don't want a job. That is insane. Never have I ever wanted to be on what you call universal credit on the dole. Never have I ever wanted to never work. I always want to work. I've always had aspirations in my career. I've always want to be involved in the financial markets and expand out into property and so on and so forth. Always wanted to. You know, still to this day, I study regulations and certifications. Still to this day, I study educational topics. Last year, I started coding through Python. Then I moved into pseudo coding and data science and so on and so forth. And even at the prime age that I am right now, I still contemplate going back to university and studying specific courses to obtain specific degrees. Maybe I am just, I don't know, weird. Maybe I am just unique. But the fact that people, one, don't want a job, 7 million people don't want a job, and 2.8 million of those people, I believe, or maybe in addition, are long-term sick. And please don't mishear what I'm saying here. I am sure of that 2.8 million, there are very deserving people that require the support and assistance because they cannot work. But there are so many people fraudulently claiming on that. It's actually funny because I have potentially got rheumatoid arthritis. And if I've got rheumatoid arthritis, I allegedly could be quantified as having a disability. But never have I ever, or never would I ever even think about going down the route of, I can get disability benefits, disability allowances. That's insane. It doesn't stop me. If anything, it makes me want to work harder in the gym and make sure I'm more mobile, make sure I'm stronger, make sure that any muscles around that potential area get bigger, get stronger. There are ways around it. You know, for example, you can actually get injections. There are steroid injections that you can get that go around specific arthritis elements and all of that jazz. But honestly, it's insane. Like, it offends me to think that people would do that. But then again, if you look at it, there's a property strategy out there that houses what you call vulnerable adults, social housing, and I know some of the very big providers, and depending on the area, you're getting anywhere between £200 and £500 per room per week. Per week. So if you've got a 10-room HMO that's converted into universal credit social housing, and if you're getting £200 a week, and there's 10 rooms, let's say, oh yeah, don't add that on. There's 10 rooms. That's 10 rooms at 200. That's £2,000 a week, right? That's £8,000 a month, and a 4-week month. £8,000 a month. That is insane. Absolutely insane. Commercial to residential conversions into a social housing UC thing. Boom. Day zero. Get the keys. £200 a day. £20 a week. If you can go and get a 24-hour security or care individual in there as well. That will obviously bring the gross down from £8,000 a month to maybe £6,000 a month gross, because obviously you pay them £1,000 or £2,000 a month, right? Whatever you need to pay them. Absolutely insane. And I mean, you can understand why these property gurus are doing it, because they're getting £8,000 a month for a 10-bed. Hey, and we're talking, the rooms are probably smaller than my office. You know, my office is about 3 meters by 3 meters. And it's just insane. Anyway, sorry to go off on a tangent. I apologize, everybody that's in the stream. It was just more about discussing politics and around economies. So coming back to the S&P, we're still, look, this is prime, right? So we're starting to see that break to the downside. This is quantified as a bit of a retest, okay? So this is that first breakdown. We've got a breakdown. This is that first retest. So this is where it's important for us to look at. This retest right now starts to become the deciding factor. Is that deciding factor strong enough, or really going to give us the identification that we're going to start pushing lower? Who knows? Let's revisit it, because I've spent half an hour covering the US indices and the economics. So let's go into gold. Does anyone have any comments on gold? Anyone watching, anyone listening, anyone in a trade? What are you looking at? What are you seeing in gold? The shiny metal. I'm just waiting to see if any questions are coming in. I'm not ignoring anybody. Remember, as I always say on these live streams, communicate with me. If you need help, let me help you. Let me provide you with education, guidance, analysis, industry experience, whatever you look for, whatever you need, just ask. Also, while I'm on investments and trading, anyone else think the Pokemon market is absolutely wild right now? Like, it's absolutely wild. So I mean, wow, no questions. Come on, traders. Come on. Anyway, it's fine. So let's talk gold. Now we're obviously on the 5 minute on gold at the moment. Let's expand out to that daily. Give me 1 second. All right, so we're ranging on gold. I mean, ever since that 4,400, 4,300 level that we had came into play, we've just respected, rejected, bounced, and we're now ranging. So this actually it looks somewhat like a bullish flag, right? So we've got the bullish leg, very corrective bullish leg. We have a bullish flag trading. We did have that breakout yesterday in gold to the upside, which we were talking about. Give me 1 second. Hate when the charts do this. So descending trend line, lower highs being printed. We were looking to see how price will trade out of this range. So with that ascending triangle. So higher lows popped in there, lower highs, as you can see. We had that expansive and voracious move to the upside. We didn't get a retest that we want, but we did get a comeback into this existing resistance level, which was the high. Let's just clean that up a little bit like that. So resistance, breakout, retesting from that resistance into the support, and then continue to the upside. I mean, to the left, we've got significant areas of potential supplies that are called your decisional levels. And then obviously at the extreme, you've got this. Oh, not that. We don't want a chat bubble. We've got this, right? Markets come in to respect that 5,030 level, that 5,000 level. We said 530 was going to be the resistance, right? So we can see it right here, right now. 5,000 was obviously the big round number. We're slightly below that, 49.95s at this moment in time. So we're seeing sellers defend that level. Now, this is on the 60-minute time frame. Let's drop down into the M15 and get some color. I hate when it does this. Sorry. All right. Wow. Okay. So we've had a slight change of character. We're bearish unconfirmed. We're reacting off of, I mean, that is literally a tick or two. So we have a change of character. If we want to get short gold now, and we're not get confirmed, in my opinion, we want to see price revisit here. And then we want to start to see, okay, now supply is taking control. From here, you can decide one or two things. You're either going to get short somewhere inside this leg, or alternatively, you're going to wait for a break, retest, continuation, and then we're going to look for something inside this to be retested, and then we'll be looking for something inside this leg to get short. Okay, that is your front leg theory. So that's based on your front leg theory. Now the risk with trading the front leg, again, the risk is lowered because we're reacting from a higher time frame resistance area. We're trading from a psychological resistance area, 5,000. Okay, but the risk trading the front leg, if it hasn't given you a double break to the downside on that front leg, is that it could reverse. It's better to see breaks of structure on that previous left leg, but it doesn't necessarily mean that you can't trade the front leg. I'm quite comfortable trading the front leg because the front leg theory it's a very old theory, but it was regenerated and quantified through some very great traders that we used to work with and associate ourselves with and discuss, and we used to kind of bash ideas around. So there's no new concepts. There's no, these people that are talking about how they made up concepts, they didn't. But people like to toot their own trumpet. So let's go down to 5. Nothing's really changed on the 5 minute. I mean, you know, we're starting to see that range. We've got that range here. Highs were straight failing. We had that sweep. We broke down. Demand was respected, so it wasn't confirmed as a sweep just yet until we started to fail. Just a fake break. Why did demand hold if supply was going to take control? Well, why? Because it wanted to refuel, come back into supply, respect that, and then we wanted to go from there, which, as you can see, we have done. So expectations for me would be pullback, I'd like to now get a pullback into here. So let's move this in. That's what I'd like. I'd like to get, and I'm going to leave this on the chart for tomorrow because we could be wrong, we could be right. I want to see a pullback into around this area. It could be here. Right, I'm going to do that because if it goes into the level, that's really nice. But if it doesn't, it's non-vanilla, and we see that quite a lot because as long as it comes into that previous range, which is this, it's okay. So let's leave that on the chart for now. Let's go across into DXY, the dollar index. I mean, we must be doing something wrong because our analysis is on point. I know we've got this as a low, but you wouldn't have taken this off of this anyway. You would have waited. And what I mean by that is you don't trade the level, you trade from the level. So you don't trade the level, you trade from the level. Oh shit, sorry, I used the wrong tool. Sorry everybody, sorry for my profanity as well. We trade from the level, okay? So we don't trade the level, we trade from the level. So what I mean by that, for those of you going, what do you mean? So when price is trading down, we haven't got our order sitting here, here, here. We're not interested in that. You know, we want to see momentum, and I'm going to really dive into that. We want to see the market trade in our preferred or prevailing direction. We want longs. We believe that DXY is going to come into support / demand into a range of price. It's going to respect that level. It's going to then continue with its bullish momentum. We don't want to buy it on the pullback. We want to buy it when it starts to go. So I don't care. I don't care if I miss this part of the move. I don't really care if I miss this part of the move, but I'm going to be in before that anyway. What I want to be seeing really is I want to be seeing some form of push. We break above some quantification within analysis, and then I want to look for longs, right? And I want to look for longs in there. I want to be below this sweep because I want to be trading away from that fake breakout. I want to be keeping my stop in an invalidation, and I don't care how big my stop is. It could be 15, I don't care. It could be 20, it could be 30, it could be 40, it could be 50, it could be 100. Doesn't matter. As long as I get an invalidation point. And I know some people will still work off of negative RRs and strikes, and they'll literally hit, you know, like a 50 pip stop and a 25 pip target. But their sharp edge, everything else, the risk of ruining it works for them. Right? I can't fault them. I've seen them take payouts time and time again, monthly payouts. So they are some good guys. They're really cool. And I'm not going to sit here and slander anyone even more because, I mean, I could slander so many of these online gurus. It's unreal. But what are they doing really well? Marketing. Incredible. I mean, some of them are absolutely incredible. Like there's one guy 5 years ago was a nobody, and now he's probably the biggest in the influencer space. And I admire that. And I despise his character, his online pseudo character, but I admire his creative genius, because this industry is more so now on social media, by the looks of it, more about entertainment. There is a lot of education out there, but people don't really value education as much. There are a select niche, there are a select few, but people don't value genuine education, they want this entertainment lifestyle. They want you to have this materialistic shit. And quite frankly, you can have both, that doesn't matter, you know, but you don't need to use it as your base. But who's more intelligent, the people that use it as a marketing expense and materialistic and expand their empires, or the people that push the professionalism that don't get anywhere or don't get as far in life? Maybe depends how you quantify that, because your values and your morals will stack up. Anyway, so we're in this long. If you're targeting your 1R, you've got it. If you're targeting your 1.5R, you've got it. If you're targeting 2R, it's there. It's a little bit higher up, you know, it's here. I mean, now you're targeting this extreme, so you've got this range high. So you're targeting somewhere in here. If you target the high, it's 2.3. If you target any more, you're going. But we break these down real time. So let's talk about where price is right now on the DXY. So we can't trade the DXY. So what we would have done is we would have been short the euro dollar, which we'll take a look on in a moment. So we have this high. If we believe momentum is still to the upside, right? If we believe that, we've got another move here that we could have looked for. You know, we could have looked for this. We could have looked for this. You know, invalidation. Would have been looking for your 1-to-1. You don't get it. We actually get stopped out. We actually get stopped out of this trade, which is okay. And it's good to take a loss, because otherwise you start having that invincibility, that money illusion, that illusion of never failing, illusion of grandeur. So 3-4 nice potential trades. I don't care about anything in terms of RR. I'm not interested. I'm just showing you the entries of potential trades that you could have had, and you could enter anywhere in this, right? You could enter up here in, but you've got 3 trades. You've obviously got that original trade from the morning that we were speaking about as well. That was Asia, but you don't trade that. So here's your US Open, here's your US Mid, and here's your Asia. So you probably wouldn't have traded that anyway. If you did trade all 4, you got 3 winners, 1 loser. If you don't trade the Asia sessions, you got 2 winners. If you trade the Asia sessions, you got 1 winner, 1 loser. If you don't trade the sesh, you've got nothing. That's the DXY, but that would be in the euro. So we now need to go like this. DXY is breaking down. We're starting to show lower highs. So that means potentially the euro dollar is now going to trade higher, okay, during this session at the moment. So let's look at how we could have traded the euro dollar. So this was Tuesday. This is Wednesday. Okay, so Wednesday we had very corrective, and this is why it's important to wait for the break, retest, continuation, break, right? Because here what we've had is break, kind of a retest, continuation, but we haven't really committed. There's no break. So what we want to look for is that break, retest, right? We don't get it. What happens? We get break, retest, failure, push back down, break, retest. So what has true form happened? This, I'm taking out this, we've got this, we've got this. So in theory from here, we could get short. It's easier to get short from here than it is up there. And this is safer. I don't know where you're going to put your stop. I don't care. Got your 1.5 maximum. That's your fixed RR. If you've got your fixed RR, you're out at 1.5. If not, you are holding like 0.6 right now, 0.4. Okay, so 0.6 right now, 0.7. Your maximum would have been 0.4 on the peak. But going off of the DXY, if we just come out a little bit higher, demand is holding, potentially a small pullback into about 1.18, and then we'll start trading higher again. But we've got this area that potentially we've got to contend with, which is a decisional area. And then we've got the extreme of the leg. So I think we'll pull back and then trade higher into 118.20s or 118.40s, 118.50s. That's what I see us trading into. I mean, the 4 hour still looks extremely horrible. We had a fake bearish flag, broke to the upside, retested areas of supply, traded low. I mean, we've printed a higher low. We've printed multiple lower highs. So it's not, and it's not the nicest of price actions right now. So we're ranging on higher time frame. We're obviously looking for a pullback on the lower time frames to get long, which kind of coincides with this ascending triangle. And let's round out the session with Bitcoin. BTC USD. I mean, we drew this ascending channel yesterday, this ascending triangle yesterday, as well as this triangular wedge. So let's just break that down into the M15. All right, so we were here when we were breaking down this PA. What happened? We traded down into the point of control. We came back up to the extreme. We traded into the extreme low, respected the extreme low, and then we're trading back up. So if supply is taking control because we're putting in lower lows and lower highs, we could trade short from this. So in theory, if we get this, we could trade short down into 65,000. So we'll leave that on there. I'm going to see where we are tomorrow. There's still obviously the risk of trading into 67.750s, which is this supply side, but we've already got a mitigation about 67.3s. Does look like it wants to trade lower. So let's see how we pan out. Obviously, I believe markets are going to trade back down into 65,000 just looking at PA, but we could, as long as we stay inside this range, price action's pretty contained. I mean, if we come out to the 4 hour, we've broken out of that ascending triangle, we've retested. So on a 4 hour, you probably want to get in short from about here anyway. So 66.7s. Wow, markets are looking good. Markets are looking good. I'm waiting for the US session. And once the US session comes in, oh, that felt good. We can see. Any questions, any queries, anything you've got, any comments? As always, traders and gentlemen, if you're not already, please like, subscribe, share, turn on your notifications across Facebook, Twitter, which is X, Instagram, YouTube. Do whatever you need to do to get the word out there. The Seacrest Markets provides live streams Monday through Friday, hosted by myself, somewhat market veteran. I've been in the industry a long time now. I break down the macros, the micros, and the technicals. I'm here to answer all your questions, your queries, respond to your comments, engaging two-way conversations, have those difficult conversations that we can't really have elsewhere, and break down indices, equities, FX, majors, miners, metals, cryptos, other commodities, whatever you do so wish me to, I can also break down. And second to that, if you haven't already, sign up and register over at seacrestmarkets.io, our CFD broker, which offers up to 1 to 500 dynamic leverage. We're also offering up to 100% deposit bonus, a credit deposit bonus, up to $500 on the first deposit. And that can be used, of course, across any trading instrument that you do so wish to. Our spreads are extremely competitive, up there in line with some of the market leaders. Our depth of market, our TOB is very good, and our trading conditions are competitive. So without further ado, as always, for those of you that are watching the recording, thank you for tuning in. For those of you that are watching the live stream, I do truly value the support. It's an absolute honor to share this with you every single morning. But for those of you that are trading today and heading into the rest of this week, please trade safe, please trade smart, and always trade Seacrest. But other than that, I'll see you this time tomorrow as we break down the markets again, and we'll go over the day's price action from today's trading. See you tomorrow. Have a good day. See you.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.